Hey traders, hey YouTube, just wanted to jump back on here. I got something exciting to share with you all. I'm here marking up the chart for Bitcoin. And it was, you're not going to believe this. After analyzing the chart and deciding that the actual trend is an uptrend, I went ahead and placed a trade. And I'm going to show you exactly how I was able to capture this profitable trade. It blows me away every time I think about it. But I'm going to go ahead and show you the P&L on this trade that I took. I just landed a $32,000 profit on Bitcoin. Now, before you get excited, and I know, is it a real account? No, it's not. It's a paper trade account. It's a mock account. It says paper trade. Okay. And I opened the account. This is the most impressive thing about it is I opened up this paper account with just $100,000. It is now have dwarfed to $179,823.55. And this one trade that I just took a couple of minutes ago. Okay, right now it's 9:27, and the trade I closed the trade out at 9:22. And it's crazy. So I'm going to share with you exactly how I marked up the chart. Okay, so welcome back, everybody. Welcome back to my Forex bootcamp training done on Saturdays. So I'm not going to give a time because, there's times where I don't have time to do it exactly at the time that I say. But throughout the Saturday, look out for a notification from YouTube that the recording is up for you to watch. All right, so let's dive into this. Let's get right into it. Now, if you're not a subscriber to the channel, you're going to want to do so after you watch this video. Hit the bell button. That way you get notifications when I do future videos just like this, where I break down what I see in the charts. So here I am, Bitcoin on USD on TradingView. This is the trading platform, charting platform that I use to mark up my charts. Okay, and they allow you to create a free paper trading account, which is a demo account, where you can practice your strategy, you can back test and mark up your charts. So I was looking at Bitcoin, and I start with the monthly time frame. Now, the monthly time frame, I noticed something here. As I opened this up, I noticed that Bitcoin came all the way down to these levels right here, which is like 920, 919 over here. So, but I noticed that Bitcoin came all the way down here and landed right at this particular line, which caused it to be a double bottom. You see, these two wicks actually touched that support line right there. So that's considered a double bottom. So if you don't know what a double bottom is when, the actual trend comes back to a point in time and you have 2 points on the support line. So that's called a double bottom. Typically on a double bottom, it bounces off and goes back up. Not always, but typically that's what happens. Now, after noticing that double bottom, I said to myself, okay, it's pulling back, so it's going back up. So let's take a closer look, because Bitcoin, as you can see over here on the left, the trend was an uptrend. Okay, right here. It was an uptrend because it kept hitting this trend line. So that was an uptrend. But then it reversed, right? It reversed. During this retracement, okay, it broke these lows over here. So your lower low, if you mark it out, was right here, right? It broke this low, which means whenever you have a break in structure, there's a good possibility the market will continue to go in that direction, right? But as you can see, based on this double bottom, it may want to continue its upward trend. So if that's the case, I want to watch to see what's going on in this area. Okay, so I'm going to go down to the weekly time frame now. And in the weekly time frame, pretty much what I'm looking to do here is taking a closer look at these candles down here to see what's going on. Okay, so again, make sure You read the candlestick Bible, so that way you can identify what these candles are. Okay. This looks like a hammer, but basically means hammer means going down. But then again, this wick right here retraced up. So there's a lot of buyers that stepped in right here, pushing the market up, right? So whenever you see wicks going up, it means that buyers stepped in, is trying to, overpower the sellers. So we're going to take a closer look and do a deeper dive of that. Okay, so we're going to go down to the daily. Now in the daily time frame, what I went ahead and did is I took a glance at the week from Saturday all the way to Saturday. So this is 1 week, right? So I marked it out, and I took this candle right here. I marked the high, and I marked the actual close of this candle, and I also marked the low of the candle. Okay, so whenever you mark, let's say Saturday to Saturday, so you mark that candle out, you have these 3 lines, right? And then I put a box around here to let me know that I'm looking for breakouts. I'm looking for the market to, trade within this particular area. And I don't know if you notice that doji candle right here. Remember I told you in my last training video that whenever you see a doji candle, you can actually trade off this doji candle, right? And you can mark that up. So whenever the market trades below this doji candle, you can get in for a sell because it actually came below. Get in for a sell, set your top stop loss above here, and try to get a 1-to-1. Okay, so you probably would have got a 1-to-1 because the market did come down to this particular level, and probably would have, you would have made a profit on this trade. All right, so it's no guarantees, but that's what I see here. So I'm going to go ahead and take this off. So continue to back test the doji candles whenever you see them. Okay, now since I marked this all up here, I notice that this particular candle is a reversal candle for an uptick. Okay, see this candle right here. All right, and that's exactly what it did. Whenever you see this pattern, right, this pattern right here, it's a good possibility the market will continue to go up. So I noticed this pattern right here. So now what I'm going to do is go down to the lower time frames and take this off here. Go down to the lower time frames and see what's going on. So the 12-hour, see there's a bounce off this area. So far so good. The 4-hour is continue to come out of the box, right? Get your 1-hour, and this is where it gets interesting. So I decided to put a trend line, all right, at this particular zone, and I started to box this area up. Let me show you exactly. It should be, this area is considered a fair value gap. Yeah, there it is. See this candle and this candle, there's a gap. Okay, because this candle did not touch the wick of this candle, and there's a middle candle here which caused a gap. So whenever you see a gap, the market has to come back and refill the gap. Okay, in this particular point, it refilled the gap and will continue this journey higher. Okay, now, and that's when pretty much I was like, okay, things are moving upward and I want to place a trade. So I went down to the lower time frames and I noticed that some bullish action, right? Bullish price action was happening, right? And I went ahead and placed a trade. So let me show you the actual trade that I placed. Okay, so this is the actual trade I placed. I placed it on the 15-minute time, 15-minute time zone, 15-minute, and and look at the results. They start climbing, right? So my profit P&L was at 17,000 at this particular point. I was like, whoa. And I had to screenshot it because it happened so fast, because I really wanted to close out the account and show you guys exactly what happened. But you see what I did? I marked up the fair value gap, right? And I said, hey, you know, the actual trend is changing, right? Upward. So I placed a trade right here off of these candles. As you can see here, this is where the line is where I placed a trade. Because I anticipated the market to go above this resistance level, possibly come back and touch it and then go up, but it just shot out like a bat out of jail, and it started climbing higher and higher and higher. Because I wanted to see it, the actual trade. I didn't anticipate it being this fast. It's ridiculous, but this is the end result. So hold on. Okay, so it continues to climb, and I was gonna actually move my stop loss from this area right here, because like I said, you always want to put a stop loss to protect your principal. So I was going to actually move my stop loss above my entry, that way I can secure more profits. But then I said, you know what, I'm not going to do that, because in case it comes back down and touches that line, I'll lose money, right? So I'm going to go ahead and close out the trade and secure the bag. All right, so rule of number one, don't ever let your profits go down. You see a profit and it shoots straight up. As fast as it shoots up is as fast as it shoots down. So you try to secure your bag, your money, right at the peak. Close it, walk away, close it to charts. You're done for the day. Don't overtrade. Don't get too greedy. Just be happy with what you just accomplished, which was a winning trade and a nice profit. Okay, so the end result was $32,011.65, which grew my account to set amounts. Wow. Whew, I wish this was a real account. I know you're probably saying the same thing, but hey, if you can grow a demo account and be consistent, as you can see, my last 3 trades were very profitable. I mean, you're going to experience some losses as well. Look at these losses. Okay. But at the same time, you'll experience some bangers as well. So, I mean, all it is just practicing. That's all it is. Eventually you'll get it. Eventually you'll read the chart. Eventually you'll understand that you only supposed to place a trade when it's going up on an uptrend. You only supposed to place a trade when it's going down on a downtrend. So you always trade following the trend, whether it's up or down. And if it's consolidating, meaning if it's going sideways, stay away. Stay away from it. Okay? Consolidations would eat up your profits and it'll make you dizzy. Okay, because what I mean by a consolidation, this is right here. This is a consolidated event right here. When the market is not making any higher highs, it's not making any lower lows, it's just trading sideways. So when you see this, you box it up. Okay, you box it up. Set your alerts. Okay, I showed you how to do that in the last video. Set your alerts to remind you to say, hey, if the market breaks out of this box going up, alert me. If the market's breaks out below the box, alert me. And then you can just go back onto the charts to see exactly what's going on. Okay, so in this particular event, I'm only looking for buys. Okay, I'm only looking for buys, and I know the market has to retrace and correct itself. So that's really important, because whenever you see a huge push upward, it's got to come back and fill the gap. Here's another gap right here. In time, you'll notify what these gaps are, and in the next video, I'll show you only how to trade in gaps. Because when you place trades in gaps, great things can happen. As long as the market doesn't go below the gap, okay, and I'll just show you what that looks like. As long as the market doesn't go below the gap, you're fine. Because usually when the market goes below the gap, it touches the gap box and continues journey going down that way. Okay. But sometimes it'll go back inside of the gap, right? It's smack in the middle, even towards the bottom of the gap, and bounce back up like this. Okay. And then where you would want to place your trade is right at the top of the gap box. So let me mark that out for you. So if the market comes down and fills that gap, right, you're going to put a long order end. You're going to put your stop loss below the gap. Let's say below this black candle, because, you know, be aware of stock hunts that, you know, be aware of stop hunts, meaning they will hunt for your stop, right? Which is, you know, because the liquidity is down here, so it'll hunt for your stop after it, you know, reaches liquidity. So you want to put your stop loss a little bit below liquidity, which is over here, and then you enter the trade. Okay, you enter the trade when the market goes above the box right here. That's where you would enter the trade for a 1-to-1. Okay, you do a 1-to-1 or a 1-to-2, but to be safe, just do a 1-to-1, which is right there. Okay, which is right there. And then you look left to see what's on the other side of that. So put a line right on top, that's your take profit. Put a line on the bottom, that's your stop loss. Okay, and you look left. Let's see what's, you know, follow that black line, and let's look left and see what's over there. Okay, so that black line is right here. Okay. So you can literally do a 1-to-1 or right back up here where liquidity is for 1-to-3 ratio. That'd be interesting to find out if it'll reach that area here. Okay. All right. So yeah, that would be interesting. But if you look at it, you notice, and that's why I put that there. Okay, let's move this box down here. You see this area here where the gap is right there. There's a gap. Let's put that box right there and stretch it out. So it's actually refilling that gap as well. Interesting. So yeah, that's how you find your gaps. 3 candles. The first candle and the third candle, the wicks are not touching, but there's a middle candle there that's separating the two. That's considered a gap. All right. There's another gap right there. Interesting. But let's see, if I go down to the 5-minute time frame, I would wait for it to fill that gap that I created right here, as you can see. And I would wait for it to bounce out of the gap. And that's where I would place my trade, right there. Okay, right at that line. All right, so yeah, it's going to take some time. You could set a buy stop order. And when it does go below and tries to fill the gap, the minute it pops out of the gap, you're then in the trade, and you're looking for, you know, it says 1-to-3. If you move this back up here, it's a 1-to-3. But, you know, don't get too greedy. Just do a 1-to-1 and bring it back down. Okay, secure some profits, things of that nature. I mean, if it does get to this point, okay, you can literally, and if I make this red, which is where my stop loss is, I would move my stop loss to break even, or even maybe a little bit above break even. Okay, to secure some profits right there. and then let it run. Okay, let it run to either a 1 to 2, a 1 to 3, but let it run. You can always continue to move your stop loss as you get closer and closer to your take profit. Your take profit's this black line, and I will make it green, so that way you can say, hey, this is where the bag is. If it hits that number or anywhere close to that number, you either let it run or you close it out yourself. That's up to you. So but yeah, that's what I would do. So let's put this back down here. Okay, and what I'm waiting for is for it to do this and then go back up. Okay, if it does that, I'll place another trade. If it does not do that, I won't place a trade. Sometimes not placing a trade is a good thing. All right, so you sit on your hands and you got to be patient, because something's happening where the market, people who got in down here are selling right here, taking their profits. This is why you see the market selling off, and at the same time coming back to fill the gap. All right, so that's pretty exciting. So some people, some of you probably would say, well, would you place a trade for a sell to go down? No, you don't want to do that, because when you do that, it could fake you out and continuous run going up. Sometimes it'll, fake you out to think it's going in the gap, and then it just, reverses to continue to go higher, because, that's what the manipulation's all about. So you got to be very careful about that. That way you're not caught in that manipulation, because the market will manipulate you to think it's going to go one way, and then it continues to go the opposite way. So all right, so that's what I wanted to share with you guys. This was a fantastic trade. I can't script it. I'm glad I was able to capture it and put it on the channel. That way you guys could rewind the video and take notes on it. But yeah, it was phenomenal. I'll keep you posted on anything that may develop, because I gotta wait for this, and who knows how long it's going to take to fill the gap. It could happen in the next 10 minutes. It could happen in the next 15 minutes. I don't know. So you just got to be patient. Half the battle is being patient enough to wait for an A1 setup. Okay, do not jump in without knowing these parameters. You got to set parameters. You got to know where your take profit is. You got to know where your stop loss is. And once you place a trade, you put your numbers inside of your trading platform. You set your stop loss, which is down here, and you set your take profit, which is up here. And then you can either walk away, watch it, whatever, or come back to it to see if it played out and hit your take profit. Okay, so as you can see, it could be, if I were to place a trade going down for a sell, it just faked me out. That's why you never go against the trend. You always want to trade with the trend, because it may not even fill the gap. It may fill the gap later on during the trading hour. Okay, but look at that. It's creating a bullish engulfing candle. If this candle engulfs the previous candle and it's higher, it's a bullish engulfing candle. Okay, but it hasn't done that. But again, the Candlestick Bible book, read it. I have the audio version of it on my website, on my YouTube channel. I'll put a description in the link in the description, so you guys can click on that and let the audiobook read it to you while you're in your car, while you're cleaning up the house, between travels from one point A to point B, and you have headphones. You could let it read to you, so that way you get an understanding of what the Candlestick Bible is all about. So as you can see, look at that. We have a bullish engulfing candle, okay, and it never came down to fill the gap. So the very next candle could be a candle that hits this green line right here. But I'm not going to place a trade because I didn't anticipate this to happen. My strategy is to trade, off the gaps. Okay, so whenever you see a gap, You trade off the top of a gap with it on an uptrend, or you trade off the bottom of the gap on a downtrend. So this is not part of my trading strategy. So I'm not going to place a trade, because as you can see, if I were to place a trade at the top of that, it's already pulling back. So, you know, another way for them to manipulate you to thinking, oh, we're going up. But look at that. It's already starting to pull back. All right, so hopefully you guys got some value out of this video. Thank you so much for watching. Don't forget to subscribe, share it with your friends. I posted a lot of videos in the past couple of hours. I want you guys to take a watch at those videos. Again, be part of the Academy. I'm growing a huge community, and I invite you to be part of that community. Inside the community, we're going to be trading, we're going to be learning, we're going to be sharing ideas, we're going to go live. Everybody that's part of my team inside the Academy, I'm going to send you guys a live Zoom link. So you will be invited to when I place live trades, so we can place trades together. And if you have any questions during the live trading session, you can go ahead and type it in the chat, and I can address those questions going forward by reading the question and just giving you the answer while you're there with me during the live trading session. So if you want to be part of this, I encourage you to subscribe to the channel, join the Academy, and then once I get notification that you've done so, I'll send you the private Zoom link, and then you'll be able to attend those live sessions. I'm gonna go live Monday, I'm gonna go live Tuesday, Wednesday, and Thursday, and Friday. So next week I'll be going live. The live sessions will be recorded, so if you miss it, you have to be part of the Academy to get the recording, because I'll be setting up the recording to all those who attend the live event, and that way you could take notes. So with that being said, again, thanks for watching, and you all have a fantastic weekend. Bye bye for now.